Trinidad and Tobago, and welcome to the Bourse Report. Yes, it's that time. It's the festive season, of course, and investors in Agostini Limited as well as Prestige Holdings Limited do in fact have quite a lot to be cheerful about based on the results that they would have reported respectively in case of Agostini for its full fiscal year as well as for Prestige Holdings for its 9-month fiscal period. Let's take a look at how both groups would have performed, soon to become one with the acquisition of Prestige Holdings Limited by Agostini pending, and how investors might fare and the groups might fare in the coming months ahead. Turning firstly to Agostini Limited, well, the group would have reported an earnings per share figure for its full fiscal period of 2025 of $3.33 per share, a 9.9% increase from the $3.03 per share recorded in that prior comparable period. Driving this performance was an improvement in revenue of 6.9% from $5.09 billion to just about $5.44 billion. TT dollars. Operating profits up 5.4% from $485 million to just about that $511 million mark. Overall, profit attributable to equity holders increased at 9.8% from $209 odd million to just about the $230 million mark for that fiscal period, as we can see. Again, when we take a look at profit before tax by segment, for Agostini, we can see that there were some notable changes in terms of its consumer product segment. It was pretty much even Stevens across the fiscal periods from fiscal 24 to 25, with profit before tax of just around $224 million. Pharma and healthcare in that yellowish segment increased just about 12% from $171 odd million in profit before tax to $191 million. And there was a modest decline in energy, industrial, and holding segment by just about 14 to 15%, from $28.2 million to $24.1 million. Again, energy, industrial, and holdings, the smallest segment of Agostini Limited. Now, when we take a look at margins and profitability margins in particular, we can see that there has been somewhat of a downward trend, though across the fiscal year there was we could call it a relative degree of stabilization between fiscal 24 and 25. When we take a look at operating profit margins for Agostini, we can see that it hovered at around 9.4%, which was broadly consistent with operating profit margins in that fiscal 2024 period of 9.5%. And that PBT margin, or profit before tax margin, declined marginally from 8.3% to just about that 8% level, suggesting that in terms of efficiency of converting every dollar for revenue generated into profit before taxes for investors or shareholders, they have become just a little bit less efficient. Of course, that is broadly reflective of the inflationary pressures at the global level and rising costs in general across the operating industry or operating sphere for businesses, regardless of industry. So looking at the 12-month history in terms of trailing earnings per share for Agostini Limited, we can see that there has been an upward trend generally in terms of that earnings per share figure, with fiscal 2023, of course, being an outlier with a one-off significant gain resulting from an acquisition, which led to a fairly significant goodwill gain or goodwill recognition on that acquisition. But notwithstanding that one outlier, we can see that there has been a general upward trend with a commensurate increase in price, or rather more than proportionate increase in price, which has led to that price to earnings ratio line in red, or trend, increasing fairly significantly, currently trading at about 19 times, whereas looking back about 2 or 3 years, it was trading at between 12 and 16 times. So at a price of $63.25, Agostini is trading at that price earnings ratio of 19 times, which is below the sector average of 26.3 times, and offers investors a dividend yield of 2.5%, which is broadly in line with the sector average of 2.6%. So with revenue growth in mind, continued acquisition activities, of course, one being the soon-to-be completed acquisition of Prestige Holdings Limited, as well as others, including Massey Distributions, a Jamaica business, and relatively fair valuations. Bourse is maintaining a market weight rating on Agostini for the time being. Turning very quickly to Prestige Holdings Limited, but the group would have reported for its 9-month fiscal period a diluted earnings per share of 94 cents, which was a nearly 20% increase from the 78 cents per share recorded in that prior comparable period. Now, revenues were up 6.6% from $1.008 billion to just about $1.07 billion. Operating profits also up 13.5% from around $87 million to $98.6 million. Profit attributable to owners ultimately up just about that 20% level, from $48.9 million to just about $50.6 million. Now, when we take a look at the major driver for PHL's improved profitability, we can see that it really has been that consistent or persistent increase in revenues over the past few fiscal periods. We can see that 6.6% increase in revenue has been, would have followed up a 2.2% increase in that 9-month period of 2024, which was on the heels of a 21.8% increase in revenue over that for that 9-month 2023 period. So again, consistent revenue increases, and from an operating profitability perspective, when we take a look at Prestige Holdings Limited's operating margins, we can see that there has been consistent improvement over the past few fiscal periods. Gross profit margins hovering at around that 33.8% level, with a steady increase in operating profit margins from 8.6% to 9.2% over the most recent comparable periods, and profit before tax margins improving from 7.3% to 8%. And just a note for Agostini investors who will be acquiring the Prestige Holdings Limited in due course, these profitability margins are broadly consistent, as you may recall, with what Agostini Limited's operating margins currently are. So certainly complementary in terms of acquisition from an operating profit and profit before tax margin perspective. So at a price of $13.39, Prestige Holdings is trading at a price earnings ratio of 10.8 times, below the sector average of 26.3 times, and offers investors a relatively attractive dividend yield of 4% compared to the sector average, again, of 2.6%. So with that moderate revenue growth in mind, improving margins, that relatively attractive dividend yield, and geographical expansion with new ventures in Panama, as well as new store openings across the Caribbean, Bourse is maintaining its market weight rating on PHL for the time being, and this will be the last time that we conduct a review for Prestige Holdings on the basis that it will be acquired in due course by Agostini Limited. Well, that's it for this week's edition. For more information, you can give us a call at 226-8773, email us at info@boursefinancial.com, and of course, you can check out our website, bourseinvestment.com, where all of our research is absolutely free, and you can catch this article in today's business section of the Trinidad and Tobago Guardian newspaper. So until we see you again, stay safe, happy investing, and enjoy the festive season responsibly. This has been the Bourse Report.